Testing one, two. Testing one, two. Can I just get a quick sound check from everybody in the room? Everybody can hear me okay? Just type in. That's perfect. All right, great. Great. Traders, good evening. Thank you very much for taking out the time of your busy day and spending a few minutes with us at Trading Market Technicals. My name is Mark. I'm going to introduce myself as well as Paul during the slides, but I just wanted to really thank you very much for taking a little bit of time out of your day and see what we have to offer with our Trading Market Technicals Trade Alert. So, in the first slide, I'm going to get right into it because I have a lot of exciting news that I want to share with you. I've been doing this for 28 years, trading the markets on a full-time basis. We've developed a fantastic trade alert system for you and the public, and we'd like to share that with you tonight. So let's get started. The first thing, as you can see on the screen, is our disclosure. And we have to put that out there. It's part of the rules, and you can peruse this as you wish. This is going to be recorded. You can ask for the recording so you can go back and listen to what we have to say, as well as any questions you have. You can also quickly email us at support@tradingmarkettechnicals.com. You can call the office. Our website is www.tradingmarkettechnicals.com. There's all of our information. Again, call the office, email us. We are always available during market hours, okay? So just quickly, our disclosure, just to peruse, give you an idea. We all know that future trading is extremely risky and it's not suitable for all traders and investors. So just keep that in mind. So let's run into the next slide. So here's our goals for today. So the first thing we want to discuss is how to profitably trade and develop and exploit an edge to reduce our risk, right? So why? I mean, what is that reason? And I think that's a powerful goal. The first thing is, and again, I don't really know how much experience everybody has in a room. We can have new guys, we can have experienced guys, we can have guys that are just trying to, just basically starting to be profitable and starting to make a living trading. So we all love trading, obviously, as well as you do. And the first thing that we want to do in trading is we always want an edge. And as we all know, that all of the big banks, the hedge funds, the mutual funds, money managers, they all have an edge. And you know what that is? It's automated trading and trade alerts that they have and that they've produced, okay? Now remember, I'm doing this 28 years, so I know how Wall Street works. I know how the big banks, how the big hedge funds work. So the first thing we want to do is develop a strategy to exploit an edge and reduce our risk in our trading. So we always want to obviously make money, and we always want to reduce our downside exposure. Goal number 2, we want to discuss potential buy and sell signals that produce the greatest profit without increasing our risk, right? High probability trades. Perfect in a nutshell, real quick. High probability trades. We want our buy signals, we want our short signals, and we want them at the least amount of risk that we enter the market and we exit the market. And that really is, in a nutshell, goal number 2. Let's go to goal number 3. We want to discuss how to properly adjust our risk to current market conditions and, of course, your trading style. So what do I mean by that? What I mean is that Mark, myself, my trading style is I'm basically a day trader. I do like to put exposure out there in overnight when the time is right. You, as an individual, you could be, again, a scalper, a day trader, an intraday swing trader, a position trader, or a longer-term investor. Now, how do you determine that? That is up to you to determine, because no one else can determine that. It's based basically on your characteristic, right, on your personality. I've seen a lot of guys, kind of high-strung type of individual. They're more of like, I need to be busy every day. So they're either going to be a scalper or a day trader. And a day trader, you could be a day swing trader, meaning that you want to take max advantage, maybe trade 4, 5, 6 times in a day, or a scalper that likes to trade 20, 30 times and be extremely active during the course of the trading day. So the trading style is important, okay? What type of a trader are you? And you need to determine that, okay? So let's move on to the next slide. Let's introduce myself and, of course, Paul. So as we all know, again, I have going on 28 years of market experience. I've been a trader. I've worked on the floor. I've executed millions of shares for major firms. I understand how their order flow works. I understand how they trade their order flow and what they're looking for within their order flow. It's very important, guys, okay? So when you see orders coming in and saying, Mark, I want to buy 600,000 shares of IBM, again, just for example purposes, and I want to be done, in 4 days, and I want the best average price you possibly can, and they piecemeal it out to you, that's important because then you're not only getting it from one institution, but then another institution calls and says, Mark, I want to buy, 300,000 shares of Apple. And, you look at the characteristics of the orders, and they're very similar, right? You look at the day, the trading day. They might say, all right, Mark, cancel the order. I'll be back to you. And what that means is that they're not finished, but they don't like the market condition at that time. So they're always looking to buy weakness, and they're always looking to sell strength, right? So that's important, the strategy that I've developed. The next is, again, the strategy. It's combining fundamentals and taking advantage of high probability price movements in the marketplace. So what does that mean? Well, obviously, fundamentals is a big thing, but really is the price movement in the marketplace. What is price doing at this particular time in the marketplace? And what I mean by that is price action, right? Intraday price action. It could be the Russell, it could be the NASDAQ, it could be all four. And we like to follow 5 indices. We like to follow the transports, the Russell, the Dow Jones, the NASDAQ, and of course the S&P. So we look at all 5. You see what is going on at that particular time. So we develop that into our trade alerts, right? So again, introducing myself, I am the founder and CEO of Trading Market Technicals. I am also an educator, developed Trading Market Technicals training program, as well as the automated trading system called the Beast. And many people use it, not only just retail, but we've been using it for institutional clients abroad and in the United States. So it's a very high probable system. And what I'm going to do now is I'm going to introduce Paul Thomas. Paul, go right ahead.
Hello, everyone. My name is Paul. And real quick, I've been day trading now for the past 9 years, primarily in the futures and Forex markets. For the past 14 years, though, I've been a functional neurologist specializing in brain performance. So, with my background as a functional neurologist and a day trader, my excitement is bringing or explaining how people lose their edge, their discipline. And there's a lot of books out there that talk about the trading psychology. I'm sure you read a couple of them. So what we built into our alerts is money management, because a lot of people lose their discipline when it comes down to money management. So again, I've been trading for 9 years full time, functional neurologist for the past 14, and I'm excited to show you our product, our trade alerts, and how you can benefit from it. So I'm going to hand it back over to Mark, and thanks. I'll talk to you guys soon.
Thanks, Paul. All right, so let's run into the next slide. This is exciting stuff here, guys, that I want to show you. And there are tons and tons of services, of trade alerts and strategies, and intraday signals and stuff like that. And you know what? I'm sure that there's a lot that's good. But what happens is this, and when you get to these slides, you're going to understand. You're going to say, "Wow, you know what? Mark is right." When it comes to this, when you sign up for a trade alert, or you sign up for a strategy, or whatever the case may be, the number one thing you want to ask the individual: are you a full-time trader? Right? Because why? Because they could just be a programmer, knowing what a MACD and a stochastic is, and program that and start selling it and marketing. And that's the biggest scam going on right now. They are not traders. They do not support the system. And that's what we do, okay? And that's really what's important here. We have full transparency going into this trade alerts, and Paul's going to explain that in the next few slides. Next couple of slides here is really interesting. And this is where a lot of the foundation, the basic, the creation of the trade alerts, okay? And that leads me into the slide, setting the foundation for your trading success. I mean, guys, that's huge. And again, I don't know the characteristics and the experience what's in this room. However, even if I just say abroad, I could touch on every one of you, whether you have the same experience that I have or not. The foundation is the biggest key to successful trading in a strategy or any discretionary trading. Because why? If you have a foundation and you honestly believe in it and you see that it is successful to you, you're going to have, it's like anything else. It's like a car racer. Let's just give you a quick example. You have a guy that's an Indy 500, his tires, and he says, like my tires, it's raining out, but, you have to trust your tires and push your car to the limit to win that Indy 500. If you believe in your tires, you're gonna finish that race and you're gonna probably win that race. Same thing with your strategy. If you believe in your strategy and your strategy has proven well to you, it doesn't matter if your strategy loses money the first day, the second day, or the third day. Remember, we have 20 business days to make money and make our month, meaning we make our paycheck. So building that foundation is huge because without a foundation, like anything else, the house crumbles. So why? Well, consistent profitability is very hard to achieve for individuals, and we are human beings, right? So we have some crutches that we have emotions that run. We have lack of what? Education. We have lack of experience. So we take everything from the internet and we try to piecemeal everything. That's not going to work, guys. We all know, and maybe we don't, that it takes up to 10,000 hours, okay, proven, you can research this on the internet, to become a successful day trader just to make money, not to hit them out of the ballpark. 10,000 hours. So why are automated trading systems very successful? Because we do the work for you, okay? We are the professionals putting out the signals for the individual that doesn't have the time to say, hey, you know what? I can't sit in front of the trading screen for 10,000 hours, let alone, for 3 hours a day because I have a job. Well, we have the system that we've developed for many, many years that's been proven. And I'm going to explain that system to you as we move on to the slides. Get to the right trading knowledge. Get the right trading knowledge. Because why? There's a lot of things out there. Options, Forex, there's futures, there's stocks, there's writing spreads. Are they all good? Absolutely. But concentrate on one thing that's going to make you money, right? If you like options, so be it. Options is your thing. Concentrate on it. If you like stock and writing option contracts, that's also good because they complement each other. But stick to something, make it perfect it, and then move on to the next strategy. That's what I do. I'm a stock trader. I'm an equities trader, Forex. I do futures. I do everything that's going to make me money at that given time. But what have I done? I specialize in futures trading. Why? Because I'm going to show you the benefits of futures trading. Next slide. How to improve your trade management. What's the biggest failure of new to intermediate traders? Anybody? It's risk. How to manage your risk. How to manage your trade, right? Anybody can pick a bear flag, a bull flag, a bullish rising wedge, a descending ascending triangle. We all know that. Anybody can pick that. Anybody. I could teach my 9-year-old daughter how to pick a pattern. How do you trade it is a whole other story. So there's a lot of schools out there that'll say, oh, I'm going to teach you how to trade. I'm going to show you how to do it. That's great. Show me how to make money. That's the main thing about why you guys are here. How to make money in the markets, right? And again, last one, how to take the correct risk. It's important. And that's what the trade alerts will do for you. Again, it's going to be repetitive, guys. High probability trades, okay? And that is what we are going to show you again tonight. Let's move on to the next slide, slide number 6, which I love. This is going to be really great. And we're going to show you a little video of the trade alert. Number 6, strategy development. And it goes back to if you're proprietary, meaning that if you trade on your own and you have your own trading system, well, how do you develop your own strategy, right? So technical versus fundamental. Well, I'm an expert market technician for 28 years. I've developed a technical analyst background as well as having a trading background. Can a technical analyst trade? Absolutely not. Most technical analysts can't trade. So if you could be a technical analyst and a trader, then you have the gift, okay? It's important because why? Most technical analysts can't wager. They can't manage their exposure. And what do I mean by the exposure? Your account size, number one, right? So let's just say you're trading futures and you have a $10,000 account size. The technical analyst can say, oh, I see a bear flag here, and this is the moving average. This is my movement, and this is what I'm going to project. That's all well and good. But what happens when you're in the trade goes against you? Well, a person could get really frightened because they're losing money and they're looking at their P&L in a red go down $100, $200, $300. Can you take that appropriate risk? Can you actually do that on your own? That's important. That's where the trade alerts come in. We do it for you. It's all labeled for you. You don't have to. We take the guessing game out of this. Let's talk about moving average or indicators. Okay? As a technician, do I use that? I use both. Absolutely, I use both. It's all part of the game. What moving average do you use? What indicator do you use? There's hundreds out there. Are they all good? Sure they are. What are you mastering in, right? Are you the MACD and the stochastic guy looking for divergence? Are you a moving average guy trading support resistance? Are you looking for pivot points? There's a ton of information out there. For you to put together this program would take you thousands of hours with quantitative analysts that will backtest this going back 20 years. Multiple time frames or one time frame. Are you a trader that just scalps 3 minute, 5 minute, 1 minute, maybe a tick? Or are you just, I look at multiple time frames. And that's what I do. I'm a big multiple time frame guy. I like to see everything in line. But is that you? Or how do you figure this out? Again, the time frame is already developed by doing extensive backtests with quantitative analysts that we've worked with through the years. Great trades are consistent in strategy, but need to adjust risk, right? So here's the biggest thing where people fail. A lot of new guys fail. I'm not going to tell you why. Great trades. I look at a trade. I see traders all the time. And I go in, I speak at different conferences all the time. I train traders, and I explain to them, okay, what do we see here? Great. Okay, I got a $20,000 trading account. You know what? I got a great bull flag set up. We have futures going up. The tick is rising. Everything is looking great. So you know what? One guy goes, I'm all in. What do you mean you're all in? I mean, we're not in Atlantic City or Vegas, right? We're not all in. So what do? We need to determine and manage your account size based on each individual trade. It's all about probability. It's all about the numbers. So by doing all in, you're basically going to blow up your account or at least take a major hit. Now it's going to take you 4 or 5 days. What do I mean by that? Okay, Joe is $100 a day trader. He makes $100 a day. Is he able to lose $300 a day? No, of course not. Absolutely not. That is not Joe. Joe can't lose, take a major hit. Now, do we all take major hits in time? Of course. It's the markets. The markets are not proven basically that there's no set in stone that I'm never gonna lose money. Of course not. We lose money every day. Losing money is part of the game, but it's reducing your exposure on every given day. So if you do get the blow up day, it's not a big deal. You'll recover quicker. Okay, that's what I mean about consistency in trading and about your risk. Right, very important. Okay, very very important, guys. And again, and here's what I want to what I'm going to talk about is that what we do is this. We look at a few things: repetitive patterns. We look at what works. We look at consistency. Okay, and what do? We take advantage of the futures market's leverage. And what do I mean by that? We all know what leverage is, right? Futures market, they provide great leverage with not a lot of money. Whereas if you're trading stocks, obviously what happens? You need $25,000 to be an intraday trader, and a penny under $25,000, you get hit with the day trading pattern rule, which you get stopped for 3 days of trading, and you got to start back again. So it's really for the rich guys, right? Whereas futures trading, you can really take advantage and get a good bang for your buck. Also, what we like to use, like I'll give you an example. Our preferred futures broker is Global Futures. We love Global Futures. Why? Now, you have to realize that. Look at your futures broker and look at them and say, okay, what is my intraday margin? Because what happens is this. It's all a formula, guys. For me, at Global Futures, I could trade ES, NQ, YM. I could trade NASDAQ, all for an average of about $400 to $500 intraday margin. So here's what I do. I take that versus the other brokerage that charges anywhere from $1,500 to $1,800 intraday margin. I'm like, oh my gosh, that means I could trade 4 instruments based on the same amount of money that I'm laying out intraday versus the other guys. So number one, you need to take a look at that. That's important because you need to max out your account. And I don't mean max out trade-wise, but max out, get the best advantage for you as a trader, because what happens when you're trading the markets? You're trading not against individuals. You're trading against hedge funds, pension funds, money managers. You're trading against the best, the elite. So that's what you need. You need that edge, and giving you that edge, Global Futures for us, our preferred broker. We have great service. Carl is one of our brokers, one of our preferred brokers that actually gives us the service that we need for our guys. And if anybody's interested in that, you could actually speak to him, give him a call, tell him that Trading Market Technicals has introduced you guys. They are one of the best, and they give us the best intraday market service is bar none. And that's really important, right? So if you're looking at it, you say, wow, okay, my gosh, I'm getting $400 to $500 intraday versus 1,800. So just alone that is a big plus for your trading account. So that's something that you guys really should take into consideration. Okay. Now, Paul is going to take on the next several slides some exciting stuff about the trade alerts. And there's a great video, guys. And wait till you see this video. It's all full transparency. And by the way, when you do sign up for this trade alerts, again, it's a free trial. You are going to be in this room and you're going to actually see it happen. There's no Twitter feed. There's no, oh my gosh, I missed it. No. You're going to be in the room. You're going to see it happen live while this goes on. Paul, why don't you take over? Tell them this exciting stuff.
All right, guys. Again, I am excited, and I want to walk you through these next slides, and then we'll finish up. So on this slide, exact buy and sell signals. Well, that is important to determine, and it's very difficult for a new trader to determine. Where do I get in? Where do I exactly put my stop loss? These are all things that our students over the years, that when we teach people to day trade, ask and struggle after they take the class. So the TMT alerts does that for you. But one thing you need to do before we get into just signals is you have to define your risk before you start. A lot of traders overlook this. They don't know how much to trade. They may over leverage their account by buying too many contracts. They're not sure what their intraday margin is, like Mark just touched on. So you need to take this take this as a business. You have to, trading is a business and you have to look at it that way, and you can't over leverage yourself while you're trading. I mean, it's just not going to work. So that's the one thing you need to do, is define your risk before you start. The next thing is understand how the alert signals work. We're going to get into examples, and I'm going to lay out what we do on ranging days versus trend trading days. The alerts are flexible, and because you have to be flexible these days in order for you to survive in today's markets. Your system that you're going to be trading or taking alerts off of is has to be flexible. The next thing is how to set expectations for an automated trading system. Again, this goes by what the day is telling us or what the markets are telling us. See, the one thing that people don't understand, they think, I have an automated trading system, or I subscribe to an alert system, and the day may be very boring. For example, there's no signals being produced on the screen because the markets aren't doing anything. So a lot of people get into trading and they look at it in the wrong light. We are susceptible to the market conditions. The markets are what create the alerts or the signals that we're going to show on our screens in the private alert room. The next thing is one of the top mistakes is new traders will trace a trade. They'll see price action spiking up in a certain direction, and then they think they're missing something, so they have to get into the trade ASAP. So they just close their eyes and hit a market order. We will never chase a stock. In order for you to have a high probability trade, you need to let that price action calm down, back test, and then give you a high probability entry signal. And that's what we do with our alerts. I'm going to give you a little bit more background on how the alerts are generated. The alerts are generated by a proprietary software that we created called the Beast. Okay? We worked with quantitative analysts to determine what time frame gives us the highest probability per trade, and they came up with the 10-minute chart. Again, they back tested and crunched data over many years. 10-minute chart is the sweet spot. So that quantitative analyst helped us create a proprietary indicator. This proprietary indicator will tell us when to trade long or when to trade short. Once the system determines when to trade long or short, now the next thing that has to happen is price action has to give us an optimal entry. So we've determined the direction, and now we have to wait for an optimal entry. Once that occurs and everything lines up, you will see an entry, a stop loss, profit targets projected on the screen. If for some reason an entry gets placed on the screen and price action fails to meet the criteria for that entry, the system will cancel the trade and you'll see that entry disappear. And I'm going to give you examples of this. So we did the homework for you. We crunched the numbers. We found the sweet spot on the time frame to trade profitably intraday. And with a flexible system, you can trade range-bound days or trend trading days. So we're going to move on to the next slide now. All right. Okay, so set your trade management criteria so your risk entries and exits match your trading style. Here's a chart of what you're going to be seeing on your screen from the private trading room. This is of the DX, the futures dollar, and you will see an entry, you will see a stop loss, and you will see recommended profit targets. Now, if you are a person with a small account, then you might want to just take all of your profits at this first recommended level. This first recommended level we call the scalper. That's what it's designed to do, is scalp the markets. The second level here that you see is called our profit maximizer level. So some people have larger accounts, or they can accept more contracts because their intraday margin is smaller than some of the other popular brokers that are out there. So they may be able to trade two contracts of the same contract, the futures contract, the dollar here. So they may be able to peel off some of their profits at the first level, the scalping level, and then take the final profits at the profit maximizing level. And then we do have the recommended level for our stops right here, our stop levels. Now this is a big deal here because many new traders, they don't know where to place these, or they're afraid that they placed it in the wrong area because it's going to directly affect their pocketbook. So you have to identify your risk. So you have to know how many contracts you can buy at any given time. And then you have to determine what type of trader you're going to be. So you have to be able to review the 3 exits that are generated by the system. You can see here we have 3 contracts in the stop loss level. We purchased 3 contracts. You can see the number 3 here. But there's only 2 levels here. Well, where's the third one? Well, the first one is the scalper. The second one is the profit maximizer. The third one, we take advantage of markets running in one direction or the other. So we call that our running trade, or our runner trade. So what will happen is, as the market explodes to the upside, that third contract, if you can handle 3 contracts per your account size, you can maximize on those big, large swings that happen intraday. So again, understanding the correct profit targets for each new day trading. Well, today is a good example. Today is a range-bound day. Last couple days actually were range-bound. So if you were trying to maximize your profits with a runner, or the profit maximizer level, which is the second level here, you wouldn't have much success because there was no follow-through in price action because there was low volume in the markets and we were just range-bound. Nothing was happening. So what you need to do is you need to adjust to each day. So what we did is we converted the alerts to a scalping system today. And so all the profits were taken off at this first level. So you have to be flexible, and we do that for you. We will make the adjustments to the automated system that produces the signals for you, and we will let you know in the room that today we're going to be scalping because, or today we're going to be trying to maximize on profit max targets and also running trades. The next thing is your mindset to manually trade the entries and exits profitably. Don't just place the order to get into the trade and fail to put your stop order. Money management is huge. The system calculates the proper risk for you, distance for stop, I should say. But again, you still need to apply the profit money management for the amount of contracts you're going to trade. We can't help you with that. But this stop loss has been determined to be the highest probability for the trades and the conditions at a particular time. So don't leave the stop off. A lot of traders say, oh, I get stopped out too much. I don't like trading with stops. I'll just manually do it. When you manually do it, you can set yourself up for failure. So please take the signals and the levels seriously. You can determine if you want to take everything off at the scalping level or let things run a little bit more and take some contracts off at the profit maximize level or have a runner. You can decide that. You have flexibility there. But do not compromise on the stop losses. I hope that made that point pretty clear. All right. We're going to get to the video very soon. This is an example of being flexible and adapting to the day's condition and adjusting risk. So you can see in the other slide, we had the scalping level and then we had the profit maximizer level. This chart, and this is a chart of today, you can see the date of the YM, all the profits were taken off at the scalping level because, again, I mentioned it earlier, we were range bound. So you can't expect follow through and you can't expect price action to tag the profit max level or the running level. So we adjust depending on the day's expectations. We do that all for you. So we take a lot of the stress off of you. We take a lot of the guesswork off of you. Oh, is it a ranging day? Is it a trending day? Oh my God, I'm not really sure. If I look at it on this time frame, it looks like it's trending. Or if I look at it this time frame, it looks like it's ranging. So again, the 10-minute chart is what we use to get our alerts off of. That 10-minute chart was determined off from the quantitative analyst that did the back testing for us. So we used his knowledge to create a system. Now use our knowledge for you to profit from. So you have to adjust your mindset too, because on days that we set the thing to a scalping system, that means it's range bound. We may not take a lot of trades. On other days that we're trending, we may take 3 or 4 trades, but now you're going to be holding those trades a lot longer. Range bound days, you're going to be getting out of them faster. So you have to understand the market conditions and you have to be able to change your mindset to say, okay, I'm scalping the system today. I'm scalping the markets today, so I have to expect to take profits sooner. And if the market ends up running in one direction, you can't get angry at yourself and then start second guessing yourself, because that's opening the door to failure or to losing your discipline or your edge. And that's what we're trying to give you, is an edge. All right, so how to accept probabilities over many days versus judge. Okay, Mark touched on this a little bit before. You may have an alert system or an automated trading system, and you may lose money 1, 2, 3 days in a row. 4th day, you get it all back and some. So we get paid at the end of the month. There's 20 trading days in the month. You have to look long term. It's very difficult these days, especially if you punch a clock, because we always crunch our hours, how much we make per hour, and we think per day. As a trader, you have to think per month. So we're transparent, and what we will do is we will show you the profits that the system has taken over the different days, and you'll see some negative days and you'll see positive days, but the overall is what is the end number, the number at the end of the month, and that's what you want to be positive, because that's what we're going to get paid on. All right, this is what you're going to see again on the screen. First thing is an entry. So first thing that's going to pop up, and the first thing you're going to see is a suggested entry level. If price action meets that criteria and enters that trade, the next thing you're going to see is a scalping target, a stop loss, and a profit maximizer target. You will see these three or these combination on trending days. On a day like today, you will only see the entry, the stop loss, and the scalping target. So you have to pay attention to your screen basically, and you have to see when the system displays an entry. You have to then go into your platform and set the entry to this number. So if the price action hits that number, you're getting into the trade in the direction that's suggested. And then automatically you have to go down and set your stop loss. And then when price action hits these recommended levels for taking a profit, then you have to peel out of the trade or take your profits depending on, again, your account size and what you guys are looking to do. All right, now we're going to get into the video. So I'm going to start the video, and you can see here's what it's going to look like when the system is recommending a trade to the long side, and here's the number. You're going to see this number on the system. Now, if you notice, the price adjusted itself. It was sitting up here, and then it adjusted itself down. So if we can give you a better entry price, you will see that new price projected on the screen. I'm going to start it back up. Now we're in the trade, and you can see now that we have the suggested stop loss area, and we have the suggested first target area for scalpers, the second target area for what we call the profit maximizer. That's for people that want to hold on to trades a little bit longer. And then the third contract is going to be the runner, and you're going to see an example of this. Now what we do is when profit target hits the scalping target, we move our stop losses to break even, just like you saw. Because now we want to take all the stress out of this trade and make it a free trade. And that's what you'll see on your screen. Now the second profit maximizer target was taken out. Now for the people that can trade the running trade, you're going to see that the stop loss is going to trail the price action just like it did here. So money management is built into these alerts, so you don't have to worry about it. I'm going to fast forward a little bit, and we're going to keep going, and I'm going to show you eventually we're going to get out of this trade. You're going to see the profit, the stop loss trail the profit, and now we're out of the trade completely. The next thing you might see is the system puts on a signal to go short. So this is the entry to go short, but if price action doesn't meet the criteria, this entry will get canceled automatically, and you'll see it disappear, just like that. Okay, we're going to move on. Here's another one now in the ES. The suggested level was shown. Then price action hit that level, so now we have the stop loss, target 1, the scalper target, target 2, the profit maximizer target, and since we have 3 contracts, the third contract will be the running trade. So we're going to let this play. I'll speed it up a little bit. Okay, here we go. Almost there. Okay, now we met target 1, so we peeled off 1 contract. Stop losses were brought up to break even. We hit the second target, the profit maximizer level. Now the stop is being trailed, or the price action is being trailed with a stop, I should say. You can see it move. And then I'm going to fast forward a little bit quicker. And then we get stopped out of the trade, so we're totally out of the trade now. So out of those 3 signals, 2 of them triggered. One on the ES for a profit of 700. The next one in the DX for a profit of 585. Total 1285 off of the alert system that you can have exposure to in the private alert room that we're going to provide for you. So I hope that video was clear, and let's just keep moving on and we'll finish up. So one of the biggest problems we found over the years is discipline. Traders lose their discipline. There's many books written about people losing their discipline. When you lack a plan, or when you risk too much capital per trade, or you trade a market that you're not familiar with, that's when you're planting seeds to lose your discipline. Okay? When you don't know how much to enter in per contract in a certain index, doubt. Doubt is the seed to lose your discipline. When you're not familiar or you're a newbie and you're so overwhelmed because the market's moving really quickly, it's actually trending that day. You don't know how to adjust your plan because maybe you didn't put a plan together. I'm not saying you guys didn't, because I don't know if you have one or not, but many traders that we teach fail to put a plan together. That's the seed to losing your discipline. On a range bound day like today, you don't know how to adjust to accommodate the range bound day. So let us do that for you. Let the automated trading system, the proprietary system that we created. Now, this system is offered only to our institutional clients and to people that passed an interview. So to make it easier on you guys, so you don't have to go through all that right now, take advantage of the alerts, because it's that system that's providing the alerts, the same system that our institutional traders are using, or the other clients of ours that went through this interview process. So, Mark, do you have anything to add to this slide before we get into the exciting offer we're going to give them?
Yeah, absolutely. So what happens is this: you have your trading system that you've created, or it could be anything that you feel comfortable with, and that you made money, um, but you really are not consistent. So what happens is this to many traders: a lot of traders will take their strategy, whether it be a MACD stochastic crossover, or you're looking for market divergence, or whatever the case may be, and they have a difficult stretch. Maybe it could be 2 or 3, 4 days. So you know what happens? The individual, they will take that strategy and revamp it totally. But really, the strategy actually works, but they don't give it enough time. So what happens is now they're adding this or taking away that, and losing valuable trading days. So what happens? They get fed up. This is a system that's been working for many years. And again, if you stick to the system, and it's like owning a business, right? And again, I really hate to cliche this, but if you own a deli, and you just opened up, you bought the deli, you bought a bunch of cold cuts, and whatever the case may be, you didn't make your quota for the day, or you didn't sell enough sandwiches. Do you close right away? No, of course not. You have to make a commitment to anything that you do, especially in trading. It's very important. So if you could say to yourself, okay, I am going to try the TMT trade alerts, or any other system for that matter, it really doesn't matter. Give it a mark, 6 months, 3 months. We're giving you an offer that's so that it's almost for free, to show you that it works. And again, total transparency, it will pay for itself. But again, guys, getting back to just in general, make sure that you give it enough time to show that it works. You can't just go and say, I'm gonna trade this system, and then all of a sudden in 2 days, without an offer, without fully going through the offer, actually gauging, well, the trade works or don't work. We have P&L for an automated trading system that again that Trading Market Technicals has developed in a few months, that it's mind-boggling, and how people just they don't understand. So again, guys, make a commitment and stick to the commitment for whatever the commitment may be for you: 2 months, 4 months, 6 months, whatever it is. But stick to it so you can really understand how it works, and look at it. Because what happens is, again, your trading system might work, but if you don't give it a chance, it's just not going to work for you. And the next thing you know, you're just spinning your wheels and you're back to square one again. Okay, good. Paul, tell them the exciting offer. It's pretty exciting.
All right. It is exciting. So, what we're going to do is we're going to offer, oops, sorry about that. We're going to offer an exclusive 14-day trial offer. It's limited to the first 50 people, or 50 traders. And normally the alerts are
And Paul,
125.
let me
Yeah, go ahead.
elaborate one thing. I'm sorry. Studying. Guys, there are well over 200 people that have signed up for this webinar. It's recorded, so just so you understand that 200 people signed up for it. We are recording this, so we send it out tomorrow morning to all registered guests. So the people that are not here, they're going to get the video and they're going to have the opportunity to sign up. So just go ahead, Paul. I just wanted to make that
That's
clear.
fine. Yeah. So again, we have a number of people that registered that want the video. We're going to be sending it out tomorrow. So this offer is for the first 50 traders. Regular price is 125 a month for the alerts in the futures markets. These are typically what we trade: the ES, NQ, YM, TF, the dollar index, which is the DX, the 6E, which is the euro dollar, 6A is the Australian dollar, the DAX, and crude oil. But this alert system will also be projected in the middle of the night for people that are overseas or the forex traders. So we will project the British pound and the New Zealand dollar. So it's for the first 50 people. It's a 14-day trial. What we're going to do is we're going to offer the 14-day trial for only $12.50. So for $12.50, you can have access to the private alert room and start taking advantage of these alerts. The link to participate in this trial offer is projected right there. So I'm going to leave this up so you guys can write that down. And right now I want to open it up to questions. So ask away and write down the link right here to take advantage of this 14-day trial for $12.50. Okay, start asking questions and then we can wrap it up. Okay, we got somebody typing the question in now. Okay, the alerts are generated by that proprietary software that I was talking about. So the alerts will be projected on the screen, and again, they're from that proprietary software. Any other questions? Mark, if you want to just open up your mic, it's up to you if you just want to come in and answer it too rather than typing
Yeah,
it in.
absolutely. Great question, by the way, as far as how the alerts are generated. Does it use order flow? No, it does not use order flow. We use price action. We don't use the order flow per se, only because that order flow is masked by dark pools. So you're not going to see volume anymore. You're not going to see the real, like if you're reading the tick. I used to, excuse me, when you're reading, reading the tape, so to speak, that was the big thing back then when you saw 25,000 shares go on a tape of XYZ. And you said, wow, let me get a quote on that. And you call the floor and you say, hey, Joe, what's going on? 25,000 shares you traded on the offer. Is that for real? Is it a cross? That doesn't happen anymore. It actually is not even it's not even viable anymore. So order flow, if you're looking at order flow intraday, honestly, I think you should be looking at something else. It's not going to give you what it was back in the day. I used to use order flow all the time. We all did as traders back in the day, and we're talking maybe 15, 20 years ago. So to me, being in this business for so long, I think order flow is really non-existent. It doesn't matter anymore because what happens is this. You have Goldman that wants to sell 3 million shares. So first of all, he'll sell 1.5 million to the dark pools, get paid for his order flow. Then he'll spread it around into 15 different accounts. You'll never know that Goldman's selling anything. And as far as order flow, as far as big prints, you might get one or two, but it really doesn't matter. It really has no bearing on trading today's markets. As you know, it's heavily manipulated by the Federal Reserve. They've been pumping liquidity into this market for the last 6 years, so it really has no bearing on it. Just give you an FYI on that. Our system is totally based on technical analysis, actionable points in the marketplace. Remember that, actionable points. Okay, value areas. That's really important here, guys. So when you look at the ES and you saw that video, those are actionable areas that what happens is that the proprietary system scans these areas from present to the past and says, okay, well, this is an actual area where we like to buy at this point in time. Okay, that is why this works, and that's why we've been trading it, and I've been trading it for many, many years. And like I said, for $12.50, it's a no-brainer. You don't like it, you cancel it. You don't have to do anything. But for $12.50, I pretty much safe to say that at least you'll make your $12.50 back in the 14-day trial period. If not, be definitely a client with trading market technicals. I mean, that's for sure. And remember, guys, I know a lot of people don't like to ask questions, during a webinar. No problem. If you have a question, I want you to send it to support@tradingmarkettechnicals.com. We will be more than happy. You can call the office. We're there every single day. We have a team of people that we are there. We're not just, again, a programmer, catch me on Twitter or, send me an email. We'll get back to you within 24 hours. We answer the phones, okay? And we are at your support any given day of your trading day of your career, as long as you're a client, obviously, with trading. So, well, anything else you'd like to add to?
No, that sounds good. If there's more questions, let's have them. If not, then I want to thank you for spending your time with us tonight. But again,
Absolutely. You guys have been great, and we actually appreciate your time. Your time is valuable, and we respect your time. And we also absolutely appreciate that you are spending it with us. Give it a try, guys. I really think that you'll see that it is a very good system and something to think about. In your trading. And I just want to add one more thing. I just thought about this. We have other traders that use the trade alerts, and you say, well, wait a minute, aren't they traders? Yeah, they are. What happens is this: they don't cover the futures market. They do stocks, they do options, they do forex, but they want another system to make extra money. So they cover the futures market, and we cover it for them. So it's like us being an analyst to them. All they do is they have it on their trading screen. They look at ES. Oh, ES got entered. I do it. Boom, I'm done. And that's the beauty part about it. So think of it as an analyst, that we're your analyst for you, and we're saying this is an entry, here's your exit, here's your stop loss. It's already made for you, it's already done for you. So something else to think about. That's all. But again, thank you guys for spending your time out. Really, really do appreciate it. Please, we'd love to hear your feedback too. So anytime, send us an email at support@tradingmarkettechnicals.com. And have a great night, everybody.
all right, everyone. If there's no more questions, then again, thank you, and we're going to be
Mark
logging
is
off.
typing, by the way. Mark is typing.
Okay, great. Well, thank you, Mark. Thank you for the comment, and hopefully we'll hear from you soon. Futures is a great market to trade. You have good leverage if you know what to do. And again, you don't need to have a super large account to profit from the market. So that's why we focus on the futures market. So again, have a great night, everybody. I'm going to be shutting this down now. And if you need to contact us, again, it's support@tradingmarkettechnicals.com. Thank you, and have a great night.